Knowledge is a process of piling up facts. Wisdom lies in their simplification. Martin H. Fischer. Well, my friends, here we want you to develop wisdom as you pile up the facts and then spend 10 to 15 minutes a day reviewing these charts, seeking to understand price movement. All we care about is being able to follow trends. Trends are extremely important. Why? Because they show us fear and greed as it plays out at three levels in the market. The longest trend that we have and the most powerful is the weekly vertical crossover. That is what we saw occur, and we texted out to everybody who's on our texting list. That is for free. Just text to the number 33222 on your cell phone the word charting wealth, one word. You'll be on that list. You'll get these text messages when they happen. And we told everyone to watch for a weekly vertical crossover going down on the S&P 500 and the NASDAQ 100. Both of those did occur. Now we have the weekly, which is our long chart, the 2-day, which is our intermediate chart, and the half-day, which is our short chart. We are looking for weekly vertical crossovers or 2-day recrosses. That's where the 2-day moves in the opposite direction of the weekly and then rotates back over in that same direction. That's also another jumping in point. And then, of course, we use the short chart for just giving us some heads up on where trend changes might be starting. But again, this is all about following trends. We are simply using the past as a roadmap to help us see historic price patterns and changes in trend between fear and greed. Typically, greed, that is when the market's going up, drives it up. Fear sends the market down. So let's jump into these charts, see where we are, and this is our weekly review and forecast. So, as I said earlier, we have a weekly vertical crossover going down on the S&P 500. You can see for the week we have a red spinning top, and of course that's the biggest red candle we have seen going back many weeks. As you look at the chart, I am simply turning the arrow around. This is how easy it is to use TC2000. This is the paid version of freestockcharts.com. If you'll look in your show notes, you will see a discount of $25 off if you subscribe to TC2000. I'm sure we've had hundreds of students do that. It is the best charting software that I've ever used. It has a web version, which is what I'm broadcasting on right now. And it's what I will also be using for all of our Patreon members this next Wednesday. The first Wednesday of March, we will have our live Patreon question and answer session. I'm already starting to get questions in. Also, stocks and ETFs you would like us to help you backtrack and follow to see if that's something worth you practice trading. Remember, we're not a stock calling service, we're an education firm. So we see a weekly vertical crossover in effect. Those are typically strong moves of the market over, and it is the first red down candle, the biggest we've seen going all the way back to the end of October. Now we look at the 2-day chart. What do we see there? Well, you can see that this last 2-day candle was on Thursday, so this is the first day of the latest 2-day candle. It will finish drawing on Monday, but you can tell that it is a big down candle that is forming. Now, again, it is a Heiken Ashi candlestick. The movement down for the day was 0.52%. Price percent oscillator moving down strongly, derivative oscillator gaining downward momentum. Half-day chart, you can see where a lot of movement in the morning, in the afternoon, not as much, not as volatile, not hitting as low a low as it did, but that price percent oscillator still spiking down, derivative oscillator heading down. So, did you jump in to the S&P 500 in a practice trade on either a put or shorting that chart by using something like SH, which is the ProShares Inverse Fund, which actually moves in the opposite direction of the movement that you see on the underlying fund, which is the S&P 500. This is a short fund, just a little bit of sophistication. You don't have to jump into these. And of course, you need to practice trade them to understand how they really work. They're revalued every day. They have higher fees. They don't work for everybody. And until and unless you practice trade them, you're not going to understand if they work for you or not. Also, if you are a Patreon member, the first thing you get is our 3-part series, Option Made Simple, The Charting Wealth Way. Very simple but profound teaching on options to help you understand it so you can start right away practice trading. Let's go on to the Qs. That's the NASDAQ 100. Some people call it the cubes. I just call it the Qs. What do we see going on there? Another weekly vertical crossover. We told you about this in the text message yesterday. For those of you who subscribe for free, it's part of what the Patreon members pay for you every month is that service. And also the folks who buy our book. This stuff's not free. Typically, if you don't support stuff that you like, it goes away. But we've been here for years, and we're just going to continue to bring it to you for free. We see a red down candle forming. Again, strong down movement this week. We got to go all the way back to when? Again, October the 30th, the week ending then, when we saw that last big red down candle. So hopefully we're going to be over this crappy time where we had pretty much a laminated on and off, just sort of rotating up and down, which makes you just stay the hell away when it gets sloppy. But hopefully we're seeing the market now roll over strong. Not that I want the market to crash. I just want it to move in the direction that I can follow. You understand that? I'm not pushing for a market crash. I don't want to see a systemic depression or recession. Nothing like that. But I do want to see the markets and the charts work together strongly. Things start getting sloppy. That's not good for any of us. We want to see good movement. We see for the day, the NASDAQ 100 was up 0.42% as opposed to the S&P down 0.52%. So we see the price percent oscillator heading down, derivative oscillator gaining lots of downward momentum. We look at the 2-day chart. Of course, that 2-day crossover, it wasn't a recross, it was a crossover in the opposite direction at that point in time, back on the 2-day candle ending Tuesday, the 23rd of February. That, again, just started the stronger move down. Now we look at the first day of this latest 2-day candle, we can see it's bottoming at about the same area, not the candle itself, but the wick. We can see the candle body itself actually going lower than that prior 2-day candle. Just the first day of the latest one, but that price percent oscillator heading down, derivative oscillator heading down, half-day chart. That's where we see where we had that up movement, just sort of sliding sideways and up a little bit. But look at that price percent oscillator still moving down, derivative oscillator still negative, but losing downward momentum. Now the real question is, which of these charts did you decide to put your practice trade in? Was it the Qs or was it the S&P 500? And again, we don't encourage you to be involved in trading more than one chart at a time. Why? Because it's hard to put a lot of energy in. You can if you're just practice trading, again, but when you're dealing with real money, I don't like to be in, and this is for the future. When you're dealing with real money in the future, I'll tell you I personally don't like to be in more than one trade at a time. Why? Because it's hard to keep your mind focused. You just have too many distractions. But practice trade everything you want to practice, see what you like and what works for you, and keep yourself honest. And of course, when you start getting good, that's when you want to look at fractional trading. I'll put that at the end of today's video. You'll see it there on the screen if you've already taken the fractional trading, but it's been a while. Take that training again so you understand it, understand the value of fractional trading. That is using a small money amount of real money, like say $50 or $100. Many of the brokerage houses will let you, like on something like the SPY, instead of spending $380 something, you can do what? You can just buy a fractional share at $100. Easy to keep up with your percentage gain or losses that way. Plus you get to practice really entering into a trade, really exiting a trade, really following a trade, really keeping yourself honest. Because if you lose $3 in that $100 trade, guess what? You lost the equivalent of 3%. If you make $10, you're a genius. So let's, again, continue to move ahead, pay attention to these charts, see where they lead us. That's where we are with the Qs and the S&P 500. We're going to leave those, go to bonds. Now, what did bonds do? Up for the day 3.31%. After this steady, growing down movement. Price percent oscillator still heading down strongly in bonds. Derivative oscillator gaining downward momentum on that weekly chart. We got that long wick there. And as we focus in more, you're going to see what started to happen. Look at the 2-day. Now that 2-day, again, plumbing down strong, but look how it's kicked back over. What did it do to us? We have a green spinning top on our Heiken Ashi candlesticks. The price blew through the half-day chart and is sitting right there up on the 2-day trend line. Now, this is just the first day of the latest 2-day candle, but that's a significant move after 1, 2, 3, 4, 5. So we've got 10 days of just accelerating down movement, and then boom, the bottoms pulled out. Well, let's look, of course, our jumping in point was somewhere around the 150 mark or so, plumbed a bottom of 136.61. Now, people always ask as they're training, and we've got a great training on that, on profit and loss bands. Okay, I'm going to write this down because I'm going to share profit and loss bands with you also. Some good education there on how do you determine and when do you determine what profit you're going to be happy with. Well, that's what this training is all about. That's what practice trading is all about. That's what filling out your trade worksheets is all about. When you start looking at how you set your profit bands, how you set your loss bands, what is it you are looking for? How much of a profit do you expect to take? How much of a loss will pull you out of the trade? Because everything finally bottoms out or tops out. Now, when we say bottom out here, for those of you not sophisticated enough, I mentioned this earlier, what would we be doing investing in something like TLT on a practice trade going down? Well, of course, we wouldn't be in TLT, would we? You don't buy something to lose money. You either are purchasing puts. You've taken our options training available for free to our Patreon supporters, or you do what? You go to something like TBF, Tango Bravo Foxtrot. What is that? That is the ProShares short of the 20-year Treasury ETF. And of course, what has it been doing since we had the 2-day crossover going up? Of course, it's been going up since then, going up quite nicely. And again, that's what you would have put your money in your practice trade into, or you would have, of course, purchased puts and practice traded them, or maybe fractionally traded those, a very small amount, maybe a contract. So again, important to practice. And of course, important if you're practicing puts to make sure you understand the difference between in the money and out of the money, and that you practice trade those and watch the difference and see how much more important it is that you get the direction right, and how you can get killed if you're out of the money, but how much more profit you can make, and balance those off. Always encourage everybody who's first starting off with options, or maybe somebody who has some experience in options but has never really looked at the relationship between in the money and out of the money, and just the difference in risk and reward potentially. The better you get, of course, the more likely you might be to try to take a little more risk in those practice trades. So what do we see going on that weekly? Of course, we talked about 2-day. We see that deceleration. This is where we're going to really see it. Look at what happened. In the morning, hammering up. In the afternoon, hammering even higher. Boom. Half-day recross at the end of the day. Now, we're going to continue to watch very closely what happens on Monday. You've made, if you were still in this trade, you made a decent profit. You may have already cashed yourself out of that practice trade. You may still be in and wondering what the hell is going to happen. 3.5% up. Well, just pay attention. Let's see what happens and then where things go from here. So watch, pay attention. And if you haven't already made the decision, didn't make it after the morning. And again, people ask me, when you're in a practice trade, how often do you check the market? Twice a day. I don't pay attention to idiot hour, that first hour in the morning. I see how the market settles out, where it is sometime late morning, and then I look at it as the day moves along toward the end of the day. So I make a decision whether to stay in or get out in the morning, and then a later one in the afternoon. What am I paying attention to? Primarily my 2-day and my weekly charts. I'm using all the charts all the time, looking at what's going on with the half day. But again, my main decision maker, all things being equal, the market moves in what direction? The direction of the largest chart. That's the direction the market tends to move in. Never, ever, ever forget that. That's why we concentrate so heavily on the big chart, on the weekly. Let's go to gold. Gold down for the day, 2.41%. Man, is that beautiful? We'll talk about that 2-day recross back a few weeks ago, but look at how gold's accelerating down. I say it's beautiful. You hear me every day saying, I can't wait to buy gold going up. Well, it ain't going up yet, friends. It's accelerating down. Look at that price percent oscillator spiking over, derivative oscillator just gaining downward momentum. 2-day chart. Look at it spiking over. Look at this huge red day. It's the biggest red down candle we've seen going back all the way to when? To Tuesday, the 12th of January. That 2-day candle, the 11th and 12th of January. Boom. Again, strong down movement. Look at this half-day chart as things have just accelerated. You can see more down movement in the morning on Friday. Not as much in the afternoon. Price percent oscillator spiking over, derivative oscillator down. That is where we are on our 4 big charts. We do have Bitcoin to review for you. Whoo, Bitcoin pulling back 6.54%. Look at this weekly candle, how it is now a red open box candle after that down movement. Price percent oscillator spiking over, going down. Still positive, but moving over, going down. Derivative oscillator gaining downward momentum. Of course, it had just disappeared previously, but it showed back up on Friday. Look at the 2-day. What's it doing to you? It is trying to cross over, going down. Now pay attention, particularly on Monday, as to what happens. Does this candle close going down, or is Monday an up day? And is this movement just going to, again, sort of digest the gains and then move back up, or is it going to continue to move down? We don't have the 2-day cross yet until that 2-day candle ends. Look at the half-day chart. We've talked about this. It already turned over, going down after peaking, and again has just managed to meander down and then sort of digest it down again. That price percent oscillator is heading down, derivative oscillator heading down. That's where we are on Bitcoin. That's where we are on all our charts. And again, Patreon members, remember this upcoming Wednesday for that live question answer call in, 12:30 Eastern Standard Time here in the U.S. All of our friends in Europe, Asia, South America, we appreciate all of you, plus all of our good friends here in the U.S. We'll all be together on Wednesday. You want to be in that crowd? Well, follow the link in the show notes and become a Patreon member at any of the 3 support levels. We so appreciate all of you. God bless. All the best from the whole team at Charting Wealth World Headquarters.